Hello, my name is Marty Windle and welcome to the SBL Guru podcast. This is another episode in our series, Strategy in Real Life, where we take elements of the SBL syllabus and we try to apply them in real life organizations. Today, we're going to look at fraud and in particular, fraud in charity organizations. So let's start off with a deep dive into 5 key elements of charity fraud, which provide an understanding of how these issues manifest and why they're so damaging to the non-profit sector. Okay, let's start off. The first issue we see in charity fraud is the misuse of funds. And we see it time and time again when money intended for charitable purposes is diverted for personal and unauthorized use. This can include things like luxury items, personal vacations, inflated staff salaries of people in the organization and the founders. We saw this in the UK in a charity called AfriCause. It was supposed to provide funds and help for poor people in Africa. The founder, William Kapame, was found guilty of stealing £100,000 in donations. Instead of using the funds to support African communities, he spent the money on luxury cars, holidays, and gambling. It was a blatant misuse of funds provided by the donors and deprived the communities of valuable support. So why did it happen? Lack of oversight and accountability in the charity, very poor segregation of duties, allowing one individual to control funds without any checks, and generally weak corporate governance structures. Issue number 2 is false reporting. This involves misrepresenting how funds are used or exaggerating the impact of the charity programs. Now, they can do this in a number of ways. It can inflate the number of beneficiaries, underreporting admin costs, or fabricating success stories. If we look at a US charity, the Kids Wish Network in the US claimed to help terminally ill children, but investigation revealed that less than 3% of the donations went into the cause. The rest was spent on costs and salaries, and it highlights a global issue that charities need to guard against. Key issues here can be a lack of transparency in financial reporting and that donors don't scrutinize charity reports closely enough. Third area we're going to talk about is a potential for conflicts of interest. This will occur when the founders of the charity falsify expenses but award contracts to friends or family without proper procurement procedures. In the UK, a prime example was Kids Company, run by Camilla Batman Gillid. Yes, that was her name, Batman. They did collect a lot of money and they were a popular charity for a time, a lot of celebrity endorsements, but there was a lot of money going to friends and family rather than having a proper procurement procedure in the organization. Why did it happen? Well, in this charity, there was a culture of trust, which meant there was less questioning and less oversight. There's a lack of any whistleblower policies to report suspicious behavior and insufficient checks and balances on senior staff and in particular trustees. The fourth issue is fake charities. These are charities that created solely to scam donors. They use emotional appeals, urgent calls for donations to exploit people's generosity. This often happens after a storm or a major disaster where they try to get people to urgently give money and then steal that money. An example in the UK was Cap Trust. They set up a fake charity in 2013. They claimed to support children, but it was really a tax avoidance vehicle. They collected £176 million, but only £55,000 was given to charitable causes. The rest was used as a tax avoidance scheme. Why did this happen? Loopholes in the charity registration process, donors failing to verify the legitimacy of the charity, and fraudsters exploiting high-profile causes to attract donations. Finally, number 5 is lax oversight. In any charity, there's a need for the board of trustees to act properly, ethically, and objectively. They also need to implement proper governance and financial controls. If they fail to do so, it can create an environment where fraud can thrive and there's no systems in place to either detect or prevent misconduct. This was also an issue in the kids' company charity, where there were no proper financial controls in place and nobody was challenging the founders' excessive spending decisions. When does this occur? It normally occurs when there's a culture of complacency or fear of conflict which prevents scrutiny in the organisation. So in the SBL exam, they quite often ask about solutions to the problems. How do we improve? How do we address these issues? So what we're going to talk about now are a number of controls and preventative measures we can use in charities to try to eliminate fraud in the organisations. Step one is to implement strong financial controls. These are the foundation of fraud prevention. Strong financial controls can ensure that funds are handled responsibly and that any irregularities are detected early. Now, this is all your bread and butter accounting stuff: dual signatures on checks, proper segregation of duties, a different person to raise and approve the expenses, classic kind of accounting stuff, proper and regular reconciliation of bank statements and financial records, and implementing financial software with proper controls. Second control we can bring in is to conduct regular audits. Audits are a key way which you can detect fraud, but also to prevent fraud, and they provide an independent assessment of the charity's financial health and compliance with regulations. So the internal audits can check for compliance, making sure that all the current rules and procedures have been complied with, but they can also verify the financial information in the company and also carry out risk assessments and assess the charity's risk management systems and make recommendation for improvements. In the UK, the Red Cross have regular audits and publish financial statements online. It helps to boost their reputation and the donors' confidence. Third thing that needs to happen in charities, a key control, is transparency. To build up trust with donors and stakeholders, there's a need for full openness and transparency. Share how funds are used and share the impact of programs. This involves publishing your financial statements, your income, your expenditure, but also showing the impact, a report, a non-financial report, which shows the impact of the donations made in the charity. It can be case studies, it can be photos and videos, but at least the donors know the money is being spent properly and what those donations are being used for. Oxfam is kind of the master of this. They're well known for their transparency. They publish regular reports on how their donations are spent and regular updates on their projects. Fourth control that is needed in charities, there's a need for proper training and education of the staff, but also the volunteers. This can reduce the risk of fraud, but also promote ethical practice and a culture of accountability. We need to have fraud awareness training in the organisation to help people prevent fraud, identify red flags at an early stage. There should also be proper training in whistleblowing policies in the organisation, make sure people know about them and how to report any issue, and full disclosure of expected behaviour in the charity. The National Trust, a heritage organisation, they have a comprehensive code of conduct and provides regular training to staff and volunteers on ethical practices and fraud prevention. Finally, it's very important that we have a strong ethical board of trustees providing proper oversight of the charity operations and ensuring proper accountability. They need to be actively involved in financial oversight, program evaluation, and strategic planning. It's also very important that they have skills diversity of people from different backgrounds, so they can provide a proper financial, legal, and governance expertise for the charity that they are overseeing. There should also be clear conflict of interest policies among trustees and the staff to prevent any conflict of interest. If we look at a UK charity, Save the Children, they've got a very strong board of trustees with strong diversity of experience and background, and they regularly review the governance practices and publish their findings to maintain transparency. Other measures you might want to introduce are to use technology, use AI, blockchain for fraud prevention, fraud detection policies, looking for unusual payments, unusual patterns of behavior in financial transactions. It's also important to engage donors, making sure donors are educated on how to spot fraudulent charities and encouraging them to ask questions before donating. It's important to remember that fraud prevention is not a one-time effort. It should be an ongoing process which requires commitment from everyone. I hope you found this useful, and if you want to have any course, extra information, please consider one of my paid courses. I'll put a link in the description. I have tuition courses, revision courses, and a double mock course based on the pre-seen material in the exam. So please get in touch if you need any of those courses. My name is Marty Windle. Thank you very much, and good luck in your exam.